Welcome to the Thinking Crypto Podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. All right, folks, let's start with the prices here in the crypto market cap. Bitcoin right now over $67,000. If you look at the daily chart, looks like it's trying to move its way back over 69,000. Some people are predicting that we may go to 72, 73,000. I don't know. We just have to wait and see. Bitcoin is at a point where it could go down or it could go up. I know that's not an answer many people want to hear, but we don't have a crystal ball, so we have to see what the next move is going to be. People want absolutes. They want certainties. Tell me what's the next move exactly. Unfortunately, we can't do that. So sometimes we have to wait and see what the charts tell us. So right now, Bitcoin is at that fork in the road where it may go either direction. Here's what Matthew Hylane, a great analyst, had to say. Bitcoin target out of this would fall at 77K. Short time frame, however, so definitely not putting all my eggs in one basket. Close below the neckline and it's invalidated. So just as the analyst is saying, right? We got to wait and let it play out. Let it show us what it wants to do next. So we got to be patient. Altcoins continue to move. Ethereum is right now over 3,900. Looks like it wants to cross $4,000. BNB at $471. Solana has been moving. It is at $145. XRP at 62 cents. Cardano at 74 cents, Dogecoin still at number 9 at 16 cents, and Shiba Inu still at number 10. These meme coins still performing really well. And here's some interesting news around Solana. Pantera Capital, which is headed up by Dan Morehead. Dan Morehead is an OG in the crypto market. The man has been investing in Bitcoin and crypto before all the other hedge funds in the market. And they are interested in buying up $250 million worth of Solana. I don't blame them, right? They go grab it up. They can probably get it at a discount. And Solana has been moving. It has good tokenomics. So I don't blame them. That would be a really good trade for them. So we got to keep an eye on Solana. It looks like it's moving like Ethereum back in the day. So I'm not telling you to go invest in Solana. Obviously, do your own research. I do hold some SOL tokens, so I'm doing the swing trade on it. Not necessarily a long-term hold, but it is looking bullish and it is moving. Now let's look at the top trending coins on social media. This data was updated 60 minutes ago. And what do you know? Solana is number 1. So that should come as no surprise because it's getting significant price movements. FET is moving incredible. You guys know this is one of my big winners that I picked for AI tokens. You got here number 3, Jupiter. Number 4, no surprise, Shiba Inu. Number 5, Ampliforth. Never heard of that. Number 6, you have Fintrust Network, if I'm saying that right. And the token ticker symbol is FTX. Ouch. That's a rough one. Lucky, LUKKI, or the LOT token. Have not heard of that. You got Phantom and CRO, which is the crypto.com token. And then Phoenix Global, never heard of that as well. So those are your top 10 trending tokens. Let's look at the tokens that have the most developer activity. This looks at the past 30 days, but can be updated based on if there's a spike in activity on the blockchain. So Status has the number 1 spot right now, but look at this. Chainlink jumped up to number 2. That's a bullish sign. I am very bullish on Link, guys. I have a good amount. I've been accumulating it. Cardano at number 3. That's good to see. Number 4, Internet Protocol. Number 5, Polkadot. Number 6, Kusama. Number 7, Hedera, HBAR. So I'm bullish on HBAR. Number 8, Optimism. Number 9, Starknet. And 10, Ethereum. So those have the most developer activity on the respective blockchain. So very, very interesting. So this is insightful data. And often you see some sort of price impact based on, developer activity. It's not the only factor, obviously, but it is something you want to pay attention to. Now, something interesting coming out of BlackRock, guys. BlackRock filed with the SEC to purchase spot Bitcoin ETFs for its global allocation fund. This is very interesting. BlackRock continues to invest in the crypto market in different ways. So it says here Bitcoin ETPs, the fund may acquire shares in exchange traded products that seek to reflect generally the performance of the price of Bitcoin by directly holding Bitcoin, including shares of a Bitcoin ETP sponsored by an affiliate of BlackRock. The fund will only invest in Bitcoin ETPs that are listed and traded on national, I guess, exchanges. But BlackRock, they're up to something here. They're doing a lot more, and it would be interesting if they started investing in other Bitcoin ETFs and distributing that to their clients. We'll see. But let's move ahead. So today, Fed Chair Jerome Powell testified before Congress, and of course, he was asked about the central bank digital currency, the CBDC digital dollar. And Senator Cynthia Lummis, she asked him some questions about it. But here's what Jerome Powell had to say. People don't need to worry about a central bank digital currency. Nothing like that is remotely close to happening anytime soon, Powell said. So what does that mean? Are they not going to do a CBDC? And it may be the thesis I shared a while back that they may use a stable coin like USDC. If they were to pick a stable coin, it would be USDC, which is backed by US treasuries and it's in the United States. Circle is regulated. That's the issuer. So it would be interesting if they don't do a CBDC, but they do a stable coin. And we know Circle's USDC is on multiple blockchains. So there's a lot of interoperability and reach. So Senator Lummis tweeted out a video of her talking to Chair Jerome Powell about this. She highlighted the following. Number one, the Fed cannot introduce a CBDC without congressional approval. Number two, a CBDC is anti-democratic and a means of financial censorship. Number three, now onward to outlawing a CBDC in America. So if Congress passes some sort of bill to outlaw a CBDC and Jerome Powell is saying, yeah, we're not even close to doing anything here, maybe they're going to go the stablecoin route. But look, this could all be smoke and mirrors, right? Just a narrative out there to not have the public worry or think about it. And they may issue something in a year from now. So we'll have to wait and see. But if they do go the route of banning a CBDC and not issuing it, I think it's going to be Circle's USDC that becomes the de facto CBDC, if you want to call it, or I should say digital dollar instead. So next week, I'll be talking to Chris Giancarlo of the Digital Dollar Project. So I'll try to get some insights from him and what he's hearing in DC from the Fed and much more. Now, quick word from our sponsor, and that is VeChain. VeChain is one of the top enterprise-grade layer one blockchains out there that is building incredible applications in Web3. They are one of the top projects. I've been invested in the VET tokens for years, guys, going back to 2018. If you've been following this podcast, you know that. And they're working with some very big brands like BMW, PwC, Walmart China, as well as Boston Consulting Group to build out a decentralized app ecosystem. The VeChain blockchain is highly sustainable, has great speed and security. And, one of the great use cases they are targeting is tracking and traceability and supply chain management, which are massive use cases, right, for products and the shipping of products and the origin and the production and so forth. So very bullish on this project. If you'd like to learn more about VeChain, go to vechain.org. Link will be in the description. Now, scumbag regulator Gary Gensler made his way on Bloomberg today, and of course was talking about a lot of different things, climate disclosures, and in addition, cryptocurrencies. And he continued his same bullshit talking points about Bitcoin is a highly speculative asset. It's like a roller coaster of volatility and a whole bunch of nonsense. I tweeted out today, the fact that he went on TV today to talk about this, but did not talk about New York Community Bank, which yesterday we saw its stock was dumping like crazy, falling off a cliff. They had to halt trading. And in fact, if you saw the news, they had to get $1 billion lifeline. Wait, which asset is volatile again? The point is, he's trying to paint crypto in a negative light, him and Elizabeth Warren. That's what they've been doing, right? So they won't even talk about what's going on in the equities market or real estate or with the banks and all the collapses. The point is, in markets, these things happen, but they're trying to distract you from the real world problems that are happening and say, see, crypto, it only happens in crypto. Crypto is the biggest problem on the planet, right? But it's all part of the plan. To distract, to try to kill crypto startups. this guy's a scumbag. So you can see what we're dealing with here, right? If he was being honest, he would talk about all these factors and talk about, hey, look, there's volatility in all markets, and have a balanced perspective and point of view that he's sharing with the public. But we know he has a hidden agenda, folks, and he's trying to fool the public. Now, while scumbag regulator Gary Gensler and Elizabeth Warren hold us up, the rest of the world is moving ahead. So the UK issued their budget statement for 2024. And within that statement, guys, it's interesting. They have a section embracing blockchain for sovereign debt management. So today's budget unveils the UK's government's commitment to explore blockchain and other distributed ledger technologies for sovereign debt management. Engaging with firms, the government aims to uncover potential applications and benefits, stating, continue to examine and will be engaging with firms on the possible applications and benefits of applying distributed ledger technology to a sovereign debt instrument. So we know the governments are going to use the blockchain tech, right? And the big thing I've often stated is, when they use it for their CBDCs or some sort of stablecoin or tokenization, which blockchains will they use? And I want to have the native token of those blockchains, right? This is the big bet. We've seen Algorand, Ethereum, the XRP ledger, and others mentioned, but we don't have full confirmation yet. A lot of these things are hush hush under NDAs. So it's exciting times, folks. And I know some of the governments won't use public blockchains, but if some of the public blockchains have private ledgers or subnets, like Avalanche has a subnet, the XRP ledger has private ledger, they're going to use those because they want to have the privacy. But I can't wait for the news and the announcement when it comes out that they're using X blockchain. And I want to make sure to have those respective tokens, because you can imagine the transaction volume, the speculation aspect, the price bump, these assets will get when it's announced a government is using them to execute financial transactions and much more. And continuing on the topic of the UK, Brian Contents, who I've had on the podcast, former CFTC commissioner, he's head of policy at A16Z. He highlighted what Rostin Benham, chair of the CFTC, said yesterday, that the UK is moving ahead of the United States. He says, as Chairman Benham recognizes, the UK is a clear global leader in developing an agile and proportionate framework for crypto assets that will both protect consumers and realize this innovation's potential. U.S. developers are taking note and looking abroad to embrace regulations, not escape them. Well put, and we got to get crypto regulations here in the U.S. Now, here's a new project. Nirvana Cloud debuts as blockchain-optimized alternative to Amazon Web Services and Google Cloud. So we are continuing to see new projects pop up, new solutions. Some are AI-driven, some are looking to solve real-world problems and just take Web 2 to the next level in Web 3. So Nirvana Labs is debuting its Nirvana Cloud computing service meant to work specifically with blockchain workloads. CEO Dan Burke told Blockworks that the startup raised $1.7 million in pre-seed funding and counts blockchain platforms like Chainlink and Avalanche as clients. Those are two big projects, and I hold both tokens. According to Burke, the company is looking to lure Web3 projects away from more general-purpose cloud providers like Amazon Web Services and Google Cloud, which are widely used across many industries, including the crypto space. But Nirvana is building a decentralized computing platform a la Golem, nor a decentralized storage solution like IPFS. Rather, it's taking the centralized status quo and specializing it for Web3. AWS and Google Cloud provide public cloud services that enable the purchase of resources such as servers and storage via the internet. The arrangement is often cost-effective as it eliminates the need for companies to maintain their own physical hardware. Blockchain applications tend to be compute-intensive, though, and which drives up the costs that Web3 companies are paying to public cloud providers. Crypto is big business for Amazon in particular, which hosts 35% of all Ethereum nodes, according to the website EtherNodes. So Nirvana Cloud says it can offer much reduced costs and better efficiency for blockchain workloads compared to AWS by doing away with unnecessary virtualization. So this seems promising, but as usual, we have to give it time to be built out and see if it's going to get adoption. But they have, it sounds like here, Chainlink and Avalanche as clients. So those are two big clients for them. So we'll see how things progress. I have to research this more if they have a token and things along those lines. But we're going to see more projects pop up, guys. We're still in the early stages. We still have to make crypto and the usage of Web3 very easy so that the next billion people can easily onboard. It has to be frictionless. It can't be hard. They can't remember a bazillion seed phrases and go through any tedious process of copying and backing up codes and so forth. That's not going to work. So I believe we'll get there, but just there's going to have to be multiple iterations. So I'm prepared to go through the future cycles of this market as we have the boom and bust cycles like we do in every asset class and make money and look for new projects like this, right? Which could be winners and have good tokenomics and all that jazz. So this seems promising though. All right, guys, that's the news. Also, a quick word from our other sponsor, that is Uphold. Be sure to check out Uphold. You can buy Bitcoin and all the top altcoins. You can also trade precious metals like gold, silver, palladium, platinum. I've been using Uphold since 2018. Guys, a great way to support the podcast, and it's free. Sign up for my free email newsletter in the description. It's on Substack. Also, follow me on all social platforms, X, Facebook, LinkedIn, TikTok, Instagram. Links in the description as well. It doesn't cost you anything. Just follow, just subscribe. I appreciate your support. Thank you for watching and listening, and I'll talk to you all later.